Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. We've got some early morning reaction here. Nothing like yesterday's CPI. That's a far more important metric than what we're dealing with here this morning. If you haven't checked it out yet, let me. And by the way, you know what? I always go to these websites and show you some things, but let me just remind everybody, if you've never checked out an economic calendar at the beginning of the week or even at least the beginning of the day, please do. It's not just about, say, earnings or whatever the headlines are. There are scheduled events on the economic calendar. This is at a site called forexfactory.com. If you go to this website, scroll through. One of the reasons that I love this site, especially for those traders who are still sort of sorting out what's an important metric to keep an eye on, what's really not an important metric to keep an eye on. They have these handy dandy little icons along the middle of the listing, and they're red, they're yellow, and they're orange. And the more impact a data release is expected to have, they'll paint it red. This site's been around for, oh my gosh, probably 25 years at this point. And when I first started trading Forex in the late 1999, year of 1999 to 2000, when Forex became basically legal to trade in the US, this was one of the sites that I relied on because I didn't know what was a high impact hot zone, an event in, say, Germany, right? This was before the euro. This made it really easy. So when you look at something like February 13th and you're scrolling through, core PPI, unemployment claims. The other great thing about a site like this is it'll give, I didn't know what a PPI was 20 some odd years ago. I really didn't understand the impact. So something like this, you read it, okay, it's from the Bureau of Labor Statistics. It's the producer price index. This is what it is. I can get a graph of the history of the data. There's so much information out there for the retail trader. Never, frankly, has the playing field been more level. And this is just one piece of all the things that we have to be able to make better decisions as traders. Don't get blindsided by data that's scheduled and already out there. And that PPI this morning, was it much of a needle mover? Well, let's go take a look. Let's see, make sure I've got the time frame, 1 day, 5 minute. There we go. And this is the way the NASDAQ responded to the 830 hot zone. So move higher. If you're wondering, yeah, what happened at 830? Right now, we have a lot of unscheduled, more geopolitical or political events that are moving equities and the indices. But this is an easy one to identify. And we've got this data point. It comes out at 830. Everybody knows it's coming. And then that move at 830 is a response to the PPI. Just like yesterday's sell-off was a response to the CPI. I know it's an alphabet soup, but two things. Be aware of what they are, or join us here in Charts and Coffee. We talk about these things regularly in the Sector Secrets Mastery, and there are data points throughout the day. So there might be 8:30 hot zones, 9:45, 10 a.m., 2 p.m. These are some of the common times. And it really kills me, it just breaks my heart when I see a trader put on what looks to be a good trade, but with really poor timing. Some of the timing is going to be, oh, there's an event that could really launch or sell off any particular market at this time for this reason. All right. So that said, I thought, we haven't dove into stuff like that. And by the way, if that kind of stuff, and I know that's sort of really basic level, but we got to start somewhere, right? Someone out there said, oh my gosh, Rog, I'm going to go check out Forex Factory. And if I'm pre-market trading the S&P, at least I know what to be aware of. So these are all little pieces, little nuances along the way. And if you're looking for more stuff like this, gang, we're coming into the final days of signing up for the Sector Secrets Mastery Immersion. Just yesterday, I did a discussion with the members, and this is going to be a longer, bigger workshop discussion. And it was on the topic of using the S&P futures for trading SPY ETF calls and puts, as well as the SPX. It's all these little pieces. Like, wait a minute, Rob, you use the S&P futures? That's what I've been teaching for many, many years now, because one is a more complete view of the S&P, and you can have your indicators up and running, calculating open, high, low, close, volatility, volume at the bell, as opposed to something that's just waking up and hasn't even brushed its teeth yet, right? Like a stock or an ETF at 9:30. It takes some time for these things to warm up. It takes some time for the open, high, low, close to start to form enough information for an indicator to process. So get a jump start on everybody else by using the ES for those levels. In fact, that's something that we did just yesterday with an S&P futures or SPY trade. All right. So that being said, I did want to give you all the link because we had a really great discussion with some awesome Q&A yesterday during our webinar. And that was the discussion we had about whether that be tools, whether that be some of the rules, whether that be some of the processes. And you can check that out actually at the Simpler Trading YouTube channel. I believe if you go to simplertrading.com/consistency, that second webinar we did yesterday, which is really a great one. Lots of great questions. You can check that out. So we've already done this. And the immersion, which I'm super stoked about, starts Tuesday. It's right around the corner. So check out those webinars. And then we go, by the way, we have a day off on Monday. So when we start talking about over the weekend positions, remember, it's a 3-day weekend coming up. All right, questions. What do we have going on? What's on your mind this morning? How many of you are, let me ask, because I don't see any questions yet. Everyone's coffee still kicking in. I went with a big mug of coffee today. Yeah, this is full of coffee today. My Simpler Trading. What are these things called? Oh, yeah, Yeti. All right. So let's get into what we've got today. What are the kind of things that we're going to be dealing with? Number one, let's just state the obvious, but let's talk about non-obvious levels. One of the things that we were looking to do, and it's something that will probably happen pretty often, is shorten the duration of our trades. I'm going to grab my drawing tools here. Okay. All right. Number one is I want to shorten the duration of my timeline in trades. In other words, I want to stick with at least knowing that if I get into a trade in the daily price movement range, I really want to have a next day optional or next day target. And the reason for that is in chop, especially chop, where look at the ranges, they're not all that wide. It doesn't take much for, in this case, the S&P that I'm looking at, to go from one end of a volatility support level to the other end, in this case, the volatility resistance level. So this is really turning into initially a 1 to 3 day time horizon to a T1. That's kind of what I'm thinking about as far as being able to successfully just take advantage of the moves. I'm not a fan of long puts. I'm not a big fan of long puts right now. So I'd rather wait for days like yesterday, where in this case, that CPI drove the S&P, NASDAQ. Everyone remembers what yesterday looked like. It drives price action lower and into a level of support that we're waiting for. Kind of like a catcher, just waiting for the pitch, right? Gold is another one. And if you don't have gold miners on your watch list, this has been something we've talked a lot about in the Sector Secrets Mastery and in the Top Tier Outlook, which is the newsletter, the premium newsletter of the Sector Secrets Mastery. Gold is another one that we want to continue to be vigilant about. Now, let's look at gold in two ways. Probably the most accessible way to the biggest group of people would be GLD options, right? And we've been focusing on GLD calls. We still have the 21, well, there are 252 calls. We had 2 expirations. We were working on one expires tomorrow, and tomorrow's Valentine's Day. It just dawned on me. Right? Okay. We have the 252 calls that either expire tomorrow or the week after. So GLD calls. Now, let's say you're a little bit more, and some of you might have remembered this. Some of you might have remembered this from the webinar yesterday, which is I've been a futures trader for a lot of years. I've been trading futures since I was 15 and a half. They're sort of my first love. And but they're volatile. Their initial margin can be kind of spendy. The per point can be a bit much. But once you understand how to control risk, either buy fewer contracts, a smaller sized contract like the MGC, you can find a way to buy a pullback on GC. And I'm telling you, this is probably going to be based on when we bought this dip and buying the GC contract. This might be, I don't know yet. And I don't say this to say anything other than this is how powerful trend following on a dip using these tools can be. But this might be my first six-figure trade of 2025. And it's not because I'm piling in. It's not because I'm adding to a loser. It's not because I'm buying more as it goes up. That's all risk. That's all risk based, well, frankly, potholes on the road of a trend. What I want to do is buy on the dip, make sure I have enough time for the trend to follow through in my favor, and take advantage of just the natural follow through of, in this case, like we have here, an uptrend. Now, I do want to mention GC is more expensive to trade than the micro gold, right? Micro gold is going to present different risk reward ratios than playing GLD calls, but there are all ways that we can trade this one thing. You just need to know how to do it, right? And these are basic things that we'll be covering in the immersion, but I would love for everyone to put gold on their radar and think about, these multiple ways of trading a narrative like gold. And then let's go to the next level, GDX. So put that on the radar as well. All right, Araz asks, what are some of my favorite ways to recognize that support and resistance have been established on a 5 or 15-minute time frame? So Araz, I'm a big believer of any indicator that I have should be robust, right? I believe in robust and universal indicators, which is to say they work well and they work on anything. So there's nothing I'm ever going to say that is unique to a symbol or really unique to a time frame. Everything that I have in terms of volatility and volume-based indicators, automated support and resistance, I can put on a tick chart or I can put on a monthly chart. So that's the first thing. So this is not specific to a 5 or 15. This is specific to the psychology and just acknowledging that a 5 or 15-minute time frame is a shorter slice of psychology. So thank you for the question. The same thing that I'm going to have on every single one of my charts are these things. So to identify support and resistance on any time frame, but specific to a 5 and 15. So what I have is an hourly price movement range, which is a historic volatility-based indicator that finds support and resistance automatically, just plots the zones right on the screen. I have my top tier candle. So for example, let's look at the Russell, right? Let's look at the Russell this morning before the bell. What do I know about the Russell? Well, here are my red and green zones. So this is the support, this is resistance. And notice every hour is different because every hour of any symbol has a slightly different characteristic for support and resistance. You can see that the volatility got very high here, right? That was at 830 hot zone. The other thing that I'll have to establish support and resistance is specific to an intraday time frame. What was the previous session close? What was the 4 p.m. Eastern close of that symbol? That's what I call the PSC. It's a psychological line in the sand, the previous session close. So I have these lines in the sand, this concept of above certain levels, there's bullish sentiment. People are really more thinking about buying. And below certain levels, people are thinking a little bit more about shorting or selling. And those are all these lines in the sand on the chart. Another thing you can do is put a 930 anchored VWAP on there. It's another thing you can do. Probably the most important thing on any of my time frames, though, arises, what do I want to do with support and resistance, right? Well, what does that mean? Do I want to short here, or is this a target? Do I want to buy here or get long calls, or is this a target? What is the usefulness of support and resistance beyond knowing what it is? Well, the usefulness of support and resistance is, do I want to be a buyer in the green zone and use the red zone as a target? Do I want to be a buyer of puts, for example, in the red zone, or a short seller? Yesterday, the S&P rallied up into the red zone, and that wasn't a reason for me to buy into momentum, right? That was a reason for me to say, based on the structure of that 5-minute time frame, that red zone was actually a trigger for buying puts. So I think a lot of times if you and I or Oz were sitting in a room with 20 other traders, we would probably find similar levels, right? If we were just drawing lines and levels, trend lines, support, resistance, whatever, we would probably all find within maybe 10%, give or take, that those same levels. So my thought is, well, if everyone else is using the same levels, what's underneath that? Well, volatility, support, and resistance is underneath that. But what differentiates how you and I trade, how, say, this group of 20 of us would be sitting around drawing lines and levels, is what each trader wants to do at that level. That's really if there's a problem or challenge in trading, it isn't necessarily finding, fairly rudimentary things like support and resistance. We can automate that, and I've done that here. You can see there are automated support and resistance levels on this chart. So I automate this to avoid the bias of seeing what I want to see, and I automate this for accuracy, and it's far more expedient. Yeah. So then it is, does someone want to buy here or does someone want to sell here? And that is the riddle of trading, right? Not what are the levels alone, but what do I want to do at the levels? And that's where the market structure, which you'll see down here, this is the multi-structure, that's its job, right? It's the one that sort of governs what it is that I should be doing. So thank you for the question. It's a great conversation. And we'll be having more instruction, having this kind of checklist or framework, however you want to look at it, about, okay, Rag, I've got support and resistance on my chart. Now what do I do? What is the plan, right? What is the plan? All right. Hey there, Jess, looking at Amazon. So yeah, here's another, this is a great follow-up to Araz's question. Yeah, wonderful. It's a great place to look at this. I do have a Darvis level here. Neutral environment. Neutral environment was preceded by an uptrend. I'm looking for a long position. Now, there's a few ways I can do this as well. I've got the support here of the Darvis. Right? This is a price pattern, not a chart pattern, a price pattern. And down here, I have the volatility support of the DPMR. Both are fine. Both are going to be valid for different reasons. The other thing I'm going to look at is there a chance that I'm going to be bouncing off the mid-level support of my secret squiggle? Silly name, powerful indicator. What's overbought, what's oversold. And that's what I'll be looking at here today. And yes, I would love to look at Amazon. But before we just jump into Amazon, I'll go through the list of names that we've got and ask, hey, is this the best example of a tech stock or a stock in consumer discretionary that could follow through? All right. Brian asked, do we get the indicators in the immersion? If you take a look at the, let's see, if you go to my.simplertrading.com/immersion. So my.simplertrading.com/immersion. I'm pretty sure I typed that in, right? Yeah, there it is. It's this right here. Okay. Depending on which package. So I don't want to give everyone the wrong information. Right. So if you want the class, which is 12 weekly sessions and a quarter in the Sector Secrets Mastery, and then I'm probably logged in because there's member pricing and there's non-member pricing. So make sure you're aware of that when you log in. But yes, if you want the top tier indicators, and the automated support and resistance and the color-coded candles, that's the pro. And if you want the daily price movement range, which is the red and the green zones, the gold and the gray zones, that's the elite. So, and there's a big bundle there. And if you want to go, and I told everyone this yesterday, when we do classes like this, we try to bundle everything together where, like, for example, on the elite, a year of the mastery is $19.97. 6 months of the DPMR and 6 months of the HPMR, that's $200 a month. You get 6 months of it. So you can see what we try to do with the bundles. But that's that. So yes, it just depends on which indicators you're looking for, Brian. All right. Gang, I got to wrap it up here. I know yesterday I had a marathon session, and thank you all for the amazing questions. And I will see you all tomorrow. Yes, same time, same station. All right, gang, be good to each other. I'll talk with you soon.